Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code Blockchain DXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to The Deep Dive, your shortcut to being truly well-informed, designed specifically for you. Today, July 30, 2025, it's a pretty high-stakes moment, honestly. There's a decision looming that could send ripples, right across the financial markets. Federal Chair John Powell is about to make a critical call on interest rates. And the impact, well, it isn't just hitting the stock market. It's surprisingly and really profoundly connected to Bitcoin and the whole crypto world.
Exactly. And, this deep dive, it's about way more than just today's announcement on rates. We're going to be pulling from your comprehensive sources here to really uncover the pivotal shifts happening right now. Think crypto regulation, some fascinating innovations, and the key market dynamics.
Okay.
So our mission today is basically to cut through all that noise, pull out the most important nuggets, the real knowledge, and connect the dots for you.
Yeah.
So you can quickly grasp the full picture, of what's unfolding in the space. It moves so fast.
Absolutely. Should be some aha moments, hopefully.
Ready for it.
Okay, let's dive in. Let's unpack this by starting with the immediate thing, the macroeconomic catalyst, interest rates, and, how markets might move.
Right.
So today, 10 p.m. Gulf Standard Time, the FOMC, the Federal Open Market Committee, they're making their announcement.
Yep, the big one.
And Chair John Powell, he's got three basic options, right? Reduce rates, keep them steady, or increase them.
That's the playbook.
And we know from your sources, President Donald Trump has been pretty vocal, hasn't he? Advocating for a rate cut.
He has, yes. Made his views quite clear. What's really interesting here, though, is the expectation. Analysts like Meek, as you mentioned, seem pretty aligned on this.
What are they saying?
The consensus view, it seems, is that if Powell and the committee do cut the rate, well, you could see the stock market get a nice bump.
Okay, a bump.
And maybe even more dramatically, Bitcoin and other cryptocurrencies could really pump up. It's that classic risk-on environment playing out.
Right. Lower rates often push investors towards riskier assets. So what's the bigger picture for the U.S. economy, according to your sources? They seem quite positive.
Yeah, the sources suggest the U.S. economy is, quote, looking great under the current administration. And this strength, this perceived strength, is believed to have a pretty significant positive ripple effect.
The domino effect, they called it.
A domino and positive impact, exactly, on other economies around the world.
And is there any, hard data backing that up in the sources?
Well, one piece they highlight is the tariff revenue collected this year, 2025. It stands at $150 billion so far.
Wow, that's a big number.
It is. And the insight there isn't just the number itself, but maybe what it signifies. A strategic pivot, perhaps, in using trade for economic strength? Could be changing global trade dynamics, contributing to that optimism.
Okay, so that's the macro backdrop. Let's zoom in now on crypto itself. How are these big forces actually playing out in, well, let's be honest, the often pretty wild world of cryptocurrencies? What's the market snapshot look like right now?
Well, okay, snapshot time. The global crypto market cap saw a bit of a dip, 4.6% in the last 24 hours, down to around $3.93 trillion.
Okay, a dip. But what about fund flows, especially ETFs?
Right, this is where it gets interesting.
Yeah.
Surprisingly, given the sort of general positive buzz lately, we're seeing negative ETF outflows right now.
Negative, really?
Yeah, about $88.5 million flowed out in the last 24 hours. That's data up to yesterday, July 29th.
Huh, that feels counterintuitive, especially with all the excitement since BlackRock jumped into the Bitcoin ETF game. That felt like a major turning point for sentiment.
It really did, and it still feels like the underlying sentiment is positive.
So why the outflows then? Do the sources give any deeper insight beyond just, traders playing games? Is there something else going on?
That's the key question. The prevailing view, at least from the analysts cited, is that these price drops, they're not really about fundamentals. It's more likely market manipulation by short-term traders. Noise, essentially.
So they're expecting a bounce back.
Very much so. The expectation is for a big turnaround, maybe inflows around $1 billion after the FOMC announcement later today. Suggests they think the real demand is still there, just waiting.
Okay, market jitters maybe. But let's talk structure. Regulation. There's been a huge move from the SEC, hasn't there? Allowing in-kind creation and redemption for crypto ETPs.
Oh, absolutely massive. People are calling it a game changer.
Why? What does in-kind actually mean here compared to before?
Right. So before it was cash only. You wanted to redeem your ETF shares. The issuer sold the crypto, gave you cash. Now, in-kind means they can actually exchange the real assets, actual Bitcoin, actual Ethereum, just like they do with gold ETFs.
Okay, so it mirrors traditional commodity ETFs. Why is that so important, beyond just operational stuff?
Well, it matters profoundly. There are 4 key benefits here. First, lower cost, higher efficiency. Big time.
How does that work?
Well, ETF issuers can now swap the actual Bitcoin and Ethereum directly. This cuts down transaction costs. It avoids certain tax issues. Basically, it makes these products way more attractive, especially for large institutions.
Okay. Efficiency makes sense.
Yes.
Does that automatically mean more big institutions will jump in? Or is there another reason they like this in-kind model?
It absolutely helps pull them in. That's the second benefit, increased institutional adoption.
Why them specifically?
Because the big players, your asset managers, your massive trading firms, they actually prefer this in-kind mechanism. It slots right into how they already operate with traditional commodities. It's familiar. It's easier for them to manage at scale.
Ah, so it lowers the barrier for them. Comfort level is key.
Exactly. Comfort and existing workflows.
And what about the crypto assets themselves? Does this actually increase demand for Bitcoin and Ether?
It does. That's benefit number 3. It creates more direct demand for, physical Bitcoin and Ethereum. Spot assets. Because to create new ETF shares or redeem existing ones, they need the actual crypto. It's not just a paper derivative. This directly pulls more real crypto into the system, increases demand for the spot assets, more liquidity.
Got it. And the fourth point, you said it was maybe the most important.
Yeah, I think arguably it is. It's the signal it sends, a maturing market signal.
What kind of signal?
This approval, it signals to regulators, to the whole financial world, really, that Bitcoin and Ethereum are being treated like legitimate commodities. That boosts investor confidence like crazy, and it could really speed up broader adoption.
So it's about legitimacy.
Deep-seated legitimation. And SEC Chair Paul Atkins has even framed it that way, saying it's part of building a fit-for-purpose crypto regulatory framework. They're even talking about options on these spot ETPs now.
Wow. So traditional finance is basically building its familiar plumbing around crypto.
That's a great way to put it. It's not just efficiency, it's integration.
Okay, speaking of ETFs and integration, BlackRock's Ethereum ETF, ETH, the potential inclusion of staking is another big story, right?
Huge potential, yes. The SEC has formally acknowledged NASDAQ's proposal to allow staking within BlackRock's spot Ethereum ETF.
And that's seen as positive.
Highly positive. It signals potential approval might be coming in the next few months. And it creates this fascinating win-win-win scenario.
Win-win. How so?
Well, BlackRock could stake the Ethereum held by the ETF. The rewards generated from that staking, they could pass those through to the investors holding the ETF shares.
Ah, so yield for the investors.
Exactly. A new income stream. And it also directly impacts the total value locked, the TVL, in the Ethereum ecosystem because more ETH gets locked up in staking.
Right. So if you're an investor holding a non-staking Ethereum ETF, you might look at this new one and think, maybe I should switch.
You absolutely might. Staking has been that kind of missing piece for these spot ETFs. They've already seen huge demand, right? Like $9.4 billion in net inflows overall since launch. BlackRock's Bitcoin ETF alone pulled in $9.5 billion.
Yeah, the demand is clearly there.
And adding staking could just pour fuel on that fire. The SEC has, 45 days to decide? Though they could extend it.
Definitely one to watch. But, quick question. What's the potential downside or risk with staking inside an ETF like that? Is there anything listeners should be aware of?
Yeah, good point. There's always the risk of slashing penalties if the validator doing the staking messes up or goes offline. Though, using professional staking services like BlackRock undoubtedly would, minimizes that risk a lot.
Okay.
And there's also the fact that staked ETH can be illiquid for certain periods. But honestly, the market seems to think the potential rewards outweigh those risks right now.
Okay, understood. Let's shift gears a bit from big institutional plays to something, much more personal for a lot of people. Buying a home. There's this 21st century mortgage act being pushed.
Right. U.S. Senate members, notably Senator Cynthia Lummis, a Republican, are pushing for this legislation.
And the idea is
pretty straightforward, really. Allow digital assets like Bitcoin to be considered when someone applies for a mortgage.
So you could use your crypto holdings to help qualify.
Essentially, yes. The goal is to help younger Americans, many of whom own crypto, qualify for homeownership without needing to sell their crypto first. Avoiding capital gains taxes, keeping their assets.
Seems like a practical idea on the surface.
It does. But there's friction. Your sources mention that Democrats are reportedly, quote, not happy.
Why not?
Concerns about crypto's volatility, mainly. And what that might mean for mortgage risk. Is it stable enough to back a loan? That's the debate.
So definitely something to keep a close eye on over the next, say, 6 months or so.
For sure. The whole asset classification and risk debate is central there.
Okay, one more on the U.S. regulatory front. The Tornado Cash developer trial, Roman Storm. What's the latest there?
Well, he's facing those allegations of money laundering through the Tornado Cash privacy protocol, which is basically a tool for mixing transactions to enhance anonymity.
Right.
And the big surprise recently was his decision not to testify in his own defense.
Oh, interesting. Why? Or what's the defense arguing instead?
Their argument is that Tornado Cash itself is just a neutral tool, a piece of code, not inherently criminal. And they claim Storm was actually worried about hackers misusing it.
Trying to distance him from the illicit use.
Exactly. And they've brought in expert witnesses who are emphasizing that there's a, quote, legitimate need for privacy in cryptocurrency. Not all privacy equals crime.
Okay. So when do we expect a resolution?
Closing arguments are actually scheduled for today, July 30th, so a verdict could come as early as today or maybe in the next few days.
And this is happening in New York, right? Didn't Storm comment publicly somewhere?
He did, yeah, on X, formerly Twitter. He basically stated he feels he's, quote, under attack because of the Biden administration. So injecting a political element there, too.
Okay, quite a complex situation. Right, so we've covered the Fed, the U.S. regulatory shifts, which are huge, but crypto's global. What's happening elsewhere? Let's look at innovation hubs like, say, Dubai. They seem to be making some interesting moves.
They really are, taking a very different, proactive approach in many ways.
Starting with Rackbank, a major bank getting into crypto trading.
Yes, Rackbank.
Yeah.
It's the first commercial bank in the UAE to offer crypto trading directly to its retail customers right through their mobile app. That's a pretty big step for a traditional bank.
Who are they partnering with for this?
They've teamed up with Bitpanda. They're a well-known European digital asset platform, been around since 2014, regulated in several EU countries, lots of users. So a credible partner.
Okay, so how does it work for the user? If I'm a Rack Bank customer, what's the experience?
Well, it's regulated by Dubai's specific crypto authority, VARA. You access it all through the bank's app. And crucially, you don't need an external crypto wallet.
Ah, so it stays within the bank's system.
Exactly. All transactions remain within the Rack Bank ecosystem, which means, the user isn't holding their own private keys. The bank manages custody. It's a trade-off, ease of use versus full self-custody.
Interesting model. What are the upsides for the user then?
Well, a big one is you trade directly in UAE dirhams, AED, so no foreign exchange losses or conversion fees if you're based there. Fees are reportedly low, execution is real-time.
Can you swap between cryptos?
Yep, crypto-to-crypto swaps are possible without having to go back to fiat first. Initially, they're supporting 8 major cryptos, and it's invitation only for now.
So what's the key insight here? Is this a model we might see elsewhere?
I think the insight is this customer-first, highly regulated approach from a mainstream bank. It could definitely set a precedent, especially for attracting users who prioritize that ease of use and the perceived security of a bank over, say, the complexities of DeFi and self-custody.
Yeah, bridging the gap for the less crypto-native user. And this fits into Dubai's broader strategy too, right? They also launched this entrepreneur's playbook for AI.
Absolutely. It's all part of their push to be a major innovation hub. This playbook, it's a 48-page PDF, basically a guide from the Dubai Chambers of Digital Economy.
Aimed at
Helping founders, entrepreneurs leverage artificial intelligence across their businesses.
And it's linked to another initiative.
Yeah, it's part of the bigger Create Apps in Dubai initiative, which has backing right from the top from Sheikh Hamdan bin Mohammed Al Maktoum.
Ambitious goals for that one, I remember.
Very. Train 1,000 UAE nationals in app development, triple the number of developers in Dubai, support 100 local app projects. Big numbers.
So what kind of advice is actually in the AI playbook? Is it practical?
Seems very practical. It gives advice on using AI for everything from, like, naming your company and branding to customer acquisition, handling billing, fulfillment, customer support, the whole business life cycle.
So not just hype, but actual how-to.
Exactly. The core insight is Dubai isn't just saying AI is important. They're providing a concrete roadmap for businesses to actually use it. They're appointing chief AI officers in government, investing in AI education for kids. It's a full-stack approach.
Building that whole ecosystem. Impressive. Okay, let's switch back to a listener question we got. This comes from Simon.
Yes, Simon's question.
He asks how the in-kind redemption for crypto ETFs that we talked about earlier might impact DeFi total value locked, or TVL.
Brilliant question from Simon. It really connects two super important growing parts of the crypto world, the TradFi gateways like ETFs and the DeFi ecosystem.
Absolutely. So what's the current TVL figure look like?
Right now, it's sitting around $140.26 billion. But your sources suggest, and I tend to agree, this number could potentially double, maybe even triple in the coming months, maybe even weeks.
Double or triple. Wow. Okay, break that down. Why such explosive growth anticipated? What's the link to in-kind ETFs?
Okay, several key drivers here. First, just pure on-chain activity. In-kind redemptions, especially for Bitcoin and Ethereum ETFs, mean real assets are moving on the blockchain.
Right, not just paper IOUs.
Exactly. It's physical settlement, essentially.
That's
So that brings more actual capital directly into the ecosystem, which naturally boosts TVL, and it could also support crypto prices.
Okay, so more real assets flowing in. What else?
Second, institutional capital flow. As these spot ETFs become more streamlined, more accessible, more normal, thanks to things like in-kind, institutions with serious capital get more comfortable.
And that capital doesn't just sit in the ETF?
Well, some does, but a chunk of it is likely to find its way deeper into DeFi. Think staking solutions, yield farming, maybe deploying capital onto layer 2 scaling networks like Arbitrum or Optimism to chase efficiency or higher yields. That flow directly pumps up TVL.
Got it. So the ETFs act like an easier on-ramp for institutional money into the broader DeFi space.
Precisely. And third, there's market sentiment and confidence. We touched on this. Regulatory clarity. Seeing big names like BlackRock succeed with these products, it builds huge confidence.
And that encourages more people to explore DeFi.
Exactly. More users, retail and institutional, start exploring platforms like Aave for lending, Lido for liquid staking, Uniswap for trading, all boosting activity in TVL.
Makes sense. And Ethereum's role in all this?
Crucial. Fourth point, Ethereum's DeFi dominance. So many of the major DeFi protocols are built on Ethereum. So any significant increase in Ethereum inflows, whether it's from ETFs, buying spot ETH, Companies putting ETH on their balance sheets, more staking, yield strategies. It immediately lifts Ethereum's TVL and often the whole DeFi market with it.
Right. And you also mentioned other narratives helping TVL.
Yeah, beyond just the ETFs, there's the ongoing treasury narrative, firms buying ETH for their balance sheets, maybe running validators, and the whole buzz around tokenization, representing real-world assets on chain. All these things feed into more capital and activity in DeFi, pushing TVL up.
Okay, that paints a really clear picture of why TVL might be poised for significant growth. That was truly a deep dive.
We covered a lot of ground.
We really did. So bringing it all together for you, our listener, what does this all mean? We've gone from Fed rate decisions to these huge SEC shifts, global innovation in Dubai.
Right. And the key is these aren't separate stories. They're all interconnected. They're all shaping the future of digital assets right now.
And hopefully these insights equip you with the knowledge you need to navigate this, to understand it better, maybe even participate if that's right for you.
Yeah, the goal is you're better informed now. You can spot the trends, understand the why behind the headlines, not just the what's.
Definitely. And as you mull all this over, here's a final thought to maybe chew on. As regulations get clearer, as big institutions pile into crypto, how does that change the original spirit of crypto? You know, the whole decentralization, individual control thing.
That's the big question, isn't it? How does that original ethos evolve, maybe even clash, with this new wave of mainstream integration? What's the balance going to be?
And what does that balance ultimately mean for the average user? Something to think about.